Hello, today is the 25th of October 2012. It is a Thursday. We'll take a look at silver on multiple time frames, technical analysis, as well as Brent spanning the last 8 years. So that will be the charts for today. But before, I have an amazing question that I want to go over, which to me really indicates the whole purpose of protecting yourself in inflation through tangible real assets, of course, silver being one of them. So let's go through the question from Buttertooth Punk. Derek, I keep my savings in silver and I'm in a bit of a bind. I need to pay for repairs to a vehicle totaling $1,500. I can cover it in fiat, but I'm considering selling off a portion of my physical, about 10% to cover the expense. I'd be selling at a rather large profit. However, I feel the move higher that I anticipate will make me regret selling. Any advice for a long-term holder? Okay, this is a great question, but what this really does advocate, or not advocate, but really explain very well is protecting yourself through inflation, as there's two things that you're going to be looking for to protect yourself. One are the emergencies. Something comes up and you need to cover it, and well, that's why you have it for these type of situations. Now you're hoping that you've been in this position for a long time, that you can start selling for a gain, especially if you were buying below the $20 an ounce period, and that's one of the key things. Now the second is, especially if you've been waiting to buy something large, maybe real estate or something, and you say, well, I know in the next 2-3 years I want to plan to do this. And well, when you notice the gains in silver come into play, you're at a selling peak, then maybe that's when you want to sell and then convert them into the real goods that you require or need at that time. So I think that's the best way to cover it. And one way of looking at it is this. Let's assume you have to recover the pairs for $1,500 and you sell your silver for $33. You sell whatever's required to get $1,500. You look back to when you bought it. Let's assume you bought it for $11 an ounce back when it was really cheap at the 2008 bottom, or in 2006-05 when it was really cheap. And now you say to yourself, okay, well, I've pretty much tripled my gains. So it really has cost me $500. That's pretty decent. But then you also want to take a look back and say, well, how much would these repairs have cost when I bought the silver, say in 2005? And if you say $1,100, well, then I beat inflation. It would be one way of looking at it, because you can be on both sides of the spectrum, especially if you sell for a loss. And so that's probably the best way of answering it. Let's now go on to the charts. We'll start off with the daily time frame. This red candle here, it was close to 31.5, but it was just close. This was a decent sized pierce. This was a literal pierce, and this is literally hitting it perfect. So it's hit the bottom of 31.50. We've had a little bit of a bounce since. Obviously, you got these pattern of these lower highs, so it still has to get over really even, well, this one and this one here. But it's still in a downtrend. So I think the best way of looking at this right now is within the 5-hour chart. But before we do that, I'm just going to draw a symmetrical triangle that really just shows this is the trend channel. You really got to break above this here. It was one of the things to really have any conviction for the market. And for any major moves, if you break down below the support line, I'm expecting a fast move down here. Okay, so with that said, let's take a look at this on the 5-hour time frame. When you're playing to hit the first Fibonacci level of 38.2%, which as you're making new lows, these numbers will continuously go lower and lower. But when you're looking to make a play to reach the first one, you really want one of two things to happen. One, a nice, amazing, good chance for a bottom level, which was, of course, the ones that were just recently hit in here. If that's the case, obviously you are in a positive position right now. Or you want a bullish confirmation where, okay, so this average is now, well, went sideways. Okay, that's good. We need to see this thing have a nice break above resistance, maybe somewhere up to 32.50, come back here, start to lift off. Okay, there's one situation to play for this line. So find the plays for you that work best, and then If they're working, go with it. Now, just because this is going flat is just not enough. After all, this had went flat, and then boom, down she went. All I had to do was really break above this resistance. It did, but it didn't. It barely broke above it, and it couldn't go higher because back in here, for example, if it would have went up here and then back down, and next thing you know, we could have tested that high. But obviously, that did not take place. And it's good. We know what these levels are. The 32.95, which of course was the 70s or 23.6% retracement from before. They're working with key levels, which is usually normal when it retraces. So I like the chances again that this level will hold for a decent sized bounce. But again, the more often you test the support level, the more likely it is that it is taken out. Okay, let's move this on to a 3-month chart now. Well, here we have it. So when you're waiting for the breakout or to buy on a breakout, you're a lot of times waiting for pullbacks. This was a big resistance level, $8 an ounce, and well, here you can say it had broken out. Now I want a serious correction. Well, there was a serious correction in here. And then a consecutive large amount, a big amount of consecutive green candles in a row, 10 or so. It breaks this resistance and has a big breakout. Okay, I'm waiting for a pullback. Well, there's the first one here. It might be the only one. But 23.6%, which is the opposite of 76.4, because this is 76.4 from point A to point B. But from point B to point A, which is a down move, is a 23.6% correction. It's working well so far. But that's why I say if it doesn't hold here, this is the next potential target level. And it's really not that uncommon for this to be all that's needed for a correction before it really breaks free for further gains later on. So that'll be it for the silver chart. Let's take a look at the Brent. We're going to take a look at this on the 22-day time frame, which each one of these candles representing 22 days. Fibonacci from here to here. Now, when you found this level here, it was just a small amount of consolidation, but at this point here, you're saying to yourself, okay, now it looks good to go. In fact, if you bought at this level, you won. You sold here. Now, this is just playing the simplistic game. And I mean a simple game, but it's sometimes better to play simple. And that is, okay, when you break above here, my game is going to be this. I'm going to buy here, stop here, sell here. That's the game. That's all you're going to do. And heck, you can let the computer just execute the trade for you. You don't even need to have to watch it. It's just going to do what it has to do. And then you're going to find out in here, oh, I won. However, if you didn't play that simplistic style, there's a good chance that this here could have scared people out, though. That's the no-brainer part within it. And another example is this. If, say, I'm shorting here with a stop above here to sell here, well, I got stopped out in here. So there's where the simplistic part is just going to make you look really, really bad. Therefore, you break above here, you wait for where? Right here. Where's your sell target? Well, if you go through different strategies, one way of playing it would be something like this. I'm going to put a stop here. I'm going to put a second stop here, my third stop here, maybe. My first target is going to be 61.8% from this high to this low, which may be somewhere around here. Obviously, that would have already hit. Maybe my second target might be this previous high. And my third sell target would be that previous high in here. That might be one different strategy that you use. And if that's the case in here, you would have sold out of 1/3 of your position, still holding on to 2/3. Maybe you've adjusted your stops. Maybe you got... maybe your first stop is maybe here and your second stop is here. Now, I don't know. That's just how you play the game, because literally, it's all this is a game. And I'd like to thank you for tuning in, and have yourself a great day. Bye-bye.